Yeah, hi everyone. I actually recorded this video earlier, but then realized it was going to have a horribly short shelf life because we were going to get the Hess vote. I was speculating on which way the Hess vote would go. And it's like, well, we're going to find out in 2 hours. So here I am re-recording the message, and I can bring you the exclusive news. Well, it's nothing exclusive about it, actually, that the vote has gone through to the benefit of Chevron. So I haven't seen the actual final numbers here, but it did seem to be much closer than usual. You know, I did have the thought that when we used to do all the Wall Street regulatory exams that we would do, it's a pass-fail. You need 70 to pass. Anything less than you fail. And of course, the perfect score is 71. Or 70, in fact. So in the case of the Hess shareholder vote, Chevron could argue that you want the shareholders to be unhappy. I don't know. I have to think about that. But essentially, it means that you're pricing the deal in favor of Chevron. So, of course, people on the Chevron side tend to furiously deny that they're underpaying for Hess anyway, as do, of course, the Hess people. So it's very much your view of future oil prices and developments. So that's that. Next FTC, I think the anticipation is that after Pioneer was approved, there may be sensitivity about it being an election year, so there's probably maybe going to be some additional grandstanding of the kind that you saw with the FTC requiring Scott Sheffield not to be on the board of Exxon. But ultimately, the big picture was the deal was approved. So we'll see. It's interesting. I think you've got to assume the deal will be approved. Whether or not there are some provisos, we'll see. And then, of course, the arbitration. I think people are tending towards thinking now that Exxon's repeated use of the word intent indicates a little bit of a weakness in the legal argument. Additionally, it's been pointed out that the original JOA was signed between Exxon and Shell, so there was really impossible to think there was intent regarding one or other being taken over. So anyway, that's that. Long story short, I would say that Chevron will be in control of Hess by the end of the year. The deal will complete. That would be my over/under, and you take your return on holding Hess back from the next, what would that be, 7 months. So the return is actually pretty good just to keep holding Hess until you get the Chevron shares. That's that. Some weakness in refining's concerning. We just had profit warning from American Airlines. So there's definitely some weakness on the oil demand side. And, but for Saudi, oil would obviously be a lot lower, and so we're dependent on Saudi maintaining the cuts this weekend at the OPEC meeting. But then, additionally, we will see increased demand in Q3. The problem is overall global demand forecasts are being cut. So the scale of the drawdown in Q3 is not as big as would have been anticipated at the beginning of the year, but it's still significant. It could be 1 million barrels a day. It depends on how hot it gets in the Middle East, and it's a pretty good bet it's going to get hot in the Middle East. And so the effect is that oil exports are reduced as they burn oil for power. And that will serve to tighten the oil market. So it looks like we'll get our range for oil, which we've been talking about, which is 80 Brent type, 95 Brent type range, higher, lower, lower, higher. And that, we think, if we hold it, and we likely will continue to do so because of what I just said about 3Q markets getting tighter in oil, then you'll see continued multiple expansion from the big oils. And these big guys just keep getting better because this is really a great deal for Chevron. And, it's just a fantastic, if they can get the deal done, it's just a fantastic benefit to the shape of the company without any question. We have said Hess is worth more to Chevron than the present value of its future free cash flow because of what it does to their asset diversity. It does become very lookalike to Exxon, but without the refining and chemical scale, but, there it is. Okay, the only other thing which I'm not going to labor because everybody's talking about it is the whole AI energy theme, which we're still playing essentially through Vistra. We've talked about, we've got Constellation long, EQT short in the model portfolio. We have Quanta Energy Services, who have a very good reputation as builders of this stuff, people like Eaton. There's actually an entire Bank of America index of the stuff that you buy if you want to be long the infrastructure for AI. And it's just, as you go into summer, I don't see how anyone's not going to just become more concerned about this issue, because essentially you're going to be short electricity. You're already short electricity in Texas. You probably get a could get short in California. You never know what's going to happen in California. But above all, some of these markets, including New York for that matter, actually might get tight for power supply if we have a very hot summer, and people will just spend more on the AI theme. So we're riding that one. Okay, have a great week.